All right, let's talk about buying a home. It can feel like you're trying to solve some crazy complex puzzle, right? And the biggest, most intimidating piece of that puzzle, it's usually the mortgage. Well, in this explainer, we are going to crack that code. We're going to draw you a super clear roadmap to owning a home, especially if you're looking in the super competitive South Florida market. So let's dive right in.
So you're picturing it, aren't you? That South Florida lifestyle. Maybe a place in Palm Beach or a brand new home in Boca Raton. It's an amazing dream to have. But, turning that dream into an actual reality, well, it all comes down to one crucial thing: getting your financing locked in and getting it right.
But let's be real for a second. All the jargon, the different rates, the sea of loan options, it can feel completely overwhelming. Like you're trying to find your way through a maze with a blindfold on. But hey, don't worry. We're about to flip the switch and light the whole thing up for you.
Okay, Section 1, choosing your mortgage path. Think of it like this. Every journey needs a road to get started, right? In the world of mortgages, there are really four main highways. So let's figure out which one is the perfect route for you.
So this table here lays out the four big players. First, you've got conventional loans. These are kind of the standard, great for people with strong credit. If you can put 20% down, you get to skip something called PMI. That's private mortgage insurance. Then there's the FHA loan, which stands for Federal Housing Administration. This is an absolute lifeline for a lot of first-time buyers because it lets you get in with a lower down payment. Next up, VA loans. These are just an incredible benefit for veterans and active duty military, often with zero down payment. And finally, for those gorgeous luxury properties in South Florida, you're going to be looking at what's called a jumbo loan.
In this chart, this right here is exactly why your choice of loan is so important. Just look at these sample rates. A VA loan is way lower than a conventional or FHA loan. I know what you're thinking. A 0.5% difference? What's the big deal? Well, trust me, over the life of a 30-year loan, that tiny difference can literally save you tens of thousands of dollars. It's huge.
Okay, next section. Unlocking strategic tools. So we've talked about the main highways, but now let's get into some of the, let's call them special tools. Think of these as secret keys that can unlock some really unique opportunities, especially in a competitive market like South Florida. First on our list, renovation loans. And let me tell you, this is a total game changer. It means you can buy a house that needs a little or a lot of love, and you can roll the cost of all those repairs right into your mortgage. One single loan. In a market like South Florida with so many beautiful older homes, this strategy is just incredibly powerful.
And you've got a few different ways to do this. There are government-backed loans like the FHA 203K, which are really common if it's going to be the home you live in. Now, if you're an investor looking for a quick flip, you might go for a hard money loan. Those are all about speed. And hey, if you already own a home, you can tap into the equity you've built up with something called a HELOC, a home equity line of credit.
Okay, but what if the biggest hurdle for you isn't the total price of the house? What if it's those first few years of monthly payments that feel kind of daunting? Well, there's this absolutely brilliant tool designed to solve that exact problem.
It's called a 3-2-1 Buydown. And it is such a powerful way to make those first few years of homeownership way more affordable. Now here's the magic trick. The seller, or maybe the builder, pays a fee up front to temporarily slash your interest rate. It sounds almost too good to be true, right? Let me show you exactly how it works.
So check this out. In your very first year, your interest rate drops by a full 3%. So let's say the loan rate is 6.53%. Boom. For year one, you're paying 3.53%. That is a massive drop in your monthly payment, right when you need that breathing room the most.
Then, in year two, the discount is 2%. So your rate bumps up just a little bit to 4.53%. It's still way below that original rate, which gives you more time to adjust and get comfortable.
And in the third year, you've got a 1% discount, so your rate is 5.53%. After that, the loan settles into its original fixed rate. But think about it. By then, you've had 3 full years to grow into that full payment. Maybe you've gotten a raise. It's a fantastic cushion.
Okay, part 3, navigating the final steps. So you get the different loan options, you know about the cool strategic tools. Now we need to get to the really practical stuff, how to actually get qualified, and maybe even more important, how to stay qualified until you have those keys in your hand.
I want you to think of this as your personal qualification checklist. Number 1, lenders are going to look for a solid credit history. Usually a score of 620 or higher is a good target. Number 2, they're going to check your debt-to-income ratio, basically making sure you're not stretched too thin. 3, you've got to have your down payment funds ready and verifiable. And finally, number 4, you'll need to prove you can repay the loan with things like your W-2s and tax returns. Getting that pre-approval letter is such a huge step. It feels amazing. But listen, you are not at the finish line yet, not even close. That period of time between getting pre-approved and actually closing on the house is absolutely critical. Your entire financial picture has to stay perfectly, totally still. And this list of don'ts you see here, this is non-negotiable. Seriously, do not open a new credit card. Do not go finance a new car. Lenders see that as brand new risk. Absolutely do not quit or change your job. That messes with your income stability. And don't make any large cash deposits that you can't document. Lenders need to trace every single dollar. Any one of these little mistakes can blow up your entire loan at the last minute.
Okay, so what's your next move? We've gone over the different paths, we've looked at the strategic tools, and we've flagged all the major pitfalls. Now for the most important question of all. How do you take all this information and actually turn it into action? You know, this quote from our source material just nails it. Navigating South Florida's mortgage landscape requires precision, timing, and expert guidance. It's so true. Getting a mortgage in a hot market isn't just about filling out paperwork. It really is about precision, perfect timing, and having a strategy that's built just for you. And really, that is the number one thing I want you to take away from all this. The right mortgage. It's not just a loan. It's not just a bunch of numbers on a page. It's the strategic key that actually unlocks the front door to that South Florida home you've been dreaming about. So we've laid out the map for you. We've shown you the main highways and even some of those clever little shortcuts. Now, the only question that's left is the one that really, truly matters most. What is the very first step you are going to take on your home buying journey?